Alrighty, welcome everybody to Econ Chats, videos designed to help you be successful in class and on the now canceled milestone. But also, maybe, possibly, even in life. And, it's good to see you, although we don't get to see you. This is day 817 of our isolation. I know things are getting a little crazy, right? But my hope is that when it comes to all this macroeconomic stuff, at least, that you don't get too fed up. All right, I apologize for that one. I always try to come up with some lame pun or something for these things, but even by my standards, that one was terrible. But to be honest, I'm talking about macroeconomics and the Federal Reserve. If you didn't quite figure that out, that's what I was talking about. The Fed, right? The Federal Reserve, the thing that you got through. Not exactly really easy to come up with puns, but I'm more than welcome them if you want to share them on the Google Classroom or something. Anyways, what I want to do with the purpose of this video, what I want you to do is hopefully kind of tie in what we did with macroeconomics, tie in what we last discussed with the Federal Reserve, and then kind of set you up for what you need to know when it comes to what we talk about, something called fiscal policy. Okay, so but for right now, macroeconomics, just a quick review, making sure that you remember that macroeconomics is the big picture, right? It's basically we're taking a look at the economy as a whole, and we want to determine if the economy is in a good state or a bad state, right? If it's healthy or not. And so, to do that, we looked at these indicators, and you went and studied these indicators. You were to have learned about GDP, gross domestic product, the dollar value of all final goods and services produced in a country in a given year. That being almost the economic heartbeat. That's the big thing that tells us how our economy is doing, because if we're talking about an economy that's producing more, then we're obviously talking about an economy that's humming along, that has people working and people are spending money, and the economy is healthy, right? Then you have inflation, and of course that measured by CPI, Consumer Price Index. If you didn't get a chance to take a look at that video from our live meet or whatever, I went through some of those numbers for you, but just to give you something to do while you're bored. But anyways, making sure that you understand inflation means our price is increasing. Okay. Then we talked about there was aggregate supply and aggregate demand, but the also big one that we always hammer on was unemployment. Understanding that unemployment isn't just mean I don't have a job. Unemployment means that you are jobless, but also actively seeking work. And there are a whole bunch of other things that create you, or that can make you not be unemployed. For example, you can have a job and not get paid, but you're not considered unemployed. You can work for 1 hour a week for pay and still not be considered unemployed. But when we talk about these numbers, we also, of course, went down to the different types of unemployment: the frictional, the seasonal, the structural, and of course the cyclical, making sure that we understood the differences in those. And so what this does now, guys, is that this all ties together, and it goes on this thing, our friend, the business cycle. And of course, depending on where we are in the business cycle, if we think we're at a peak or an expansion phase, situations are going to be very different, right, than if we're at the contraction or if we're at a trough kind of phase in our economy. If we're in an expansion, obviously unemployment's going to be low, GDP is going to be high. We'll notice some inflation coming in there because people are spending money, and so demand is increasing prices, and that happens. In a contraction or in a trough, the opposite's going to be true. Obviously, people are going to be losing their jobs. GDP is going to be falling, therefore, because people aren't working, and prices do come down on certain goods. So that's something to consider. So nowadays, when you look at this, you have you are living in a time where obviously we are living in a economic contraction, and we are looking at all these numbers. You have, for example, there has been major, almost record-setting unemployment numbers coming out. If you watch the news at all nowadays, you'll see unemployment obviously is going to be going up, and again, big numbers on some of those jobless claims that are happening. We also have the by shutting down big parts of the economy, you're going to assume that gross domestic product is certainly going to fall. That's measured every 3 months. We can certainly see that. And so all of these things go on to this this business cycle. And then, we now kind of have an idea of where we are. And for right now, we're in an economic contraction. So what is a very valid question to ask, especially nowadays. Why do we have to understand all this stuff about macroeconomics and whatnot? And what I want you to understand is that, particularly during this time, your teachers and I really want you to be able to get something out of this class that you can not only take with you after you leave, but also maybe can help make some sense of the world around you. And so when we look at this macroeconomic stuff, I know that some of y'all are very aware that unemployment numbers have increased, for example. I'm sure you'll feel that and know that better than some. But at the same time, what I need you to understand out of this class is, now that we have this information, what's going to be done about it? And there's going to be two entities that you need to understand what they do, because what they do really affects you on a daily basis. The biggest, or one of these entities, is the Federal Reserve. Bringing it back to your assignments that you've already done, when we talk about the Federal Reserve, what you need to remember is that the Federal Reserve, created in 1913, the central bank of the United States. It is the bank of banks. It's the bank of the government. It is the granddaddy banks. It is the one bank to rule them all. But what you need to understand is that obviously this is a very important banking system, and they are split up into 12 different sections. The country is split up into 12 different sections. Hopefully by one of those assignments, you also remembered and picked up that we do have a Federal Reserve Bank in ATL, Georgia. Hot Atlanta's got one. So, that's something to keep in mind. But what also to remember is that what we have are, these different groups, or these different sections, districts, are all being monitored, and they're all being watched for the same macroeconomic indicators that we've talked about, with a bunch of other stuff as well. But here's the thing. So they have an idea of how the economy is doing. What they now have to do is do something. Okay, so they are going to do something now based on how the economy is doing. And you have to understand kind of what they do. Now, there were a whole number of things that the Federal Reserve System does. It's there. But when we talk about what the Federal Reserve, the most important thing that you kind of need to keep in mind is that they really help stabilize and control our economy, mainly by controlling the amount of money in our system. And they do that through three different tools. The three different tools you need to know is looking at the discount rate, or interest rates, adjusting those. They may increase those, they may decrease those depending on how the economy is doing. The reserve requirements, which are the required amount of money that banks are required to keep in reserves, and so they can adjust that amount. If they lower that, that means there's more money to be borrowed, if you will. And then you've got the open market operations, one of the biggest ways they can impact the money supply, and that's through the buying and selling of government bonds. And so we look at these three tools. What we need to now understand is, so what are they going to do about it now that the coronavirus is going on, right? Like, what is it that the Federal Reserve kind of does? And, I could sit there and try to explain it to you, or I could invite a buddy of mine.
So without further ado, ladies and gentlemen, please make some noise. Get excited for Federal Reserve Chairman, Mr. Jerome Powell.
Jerome Powell, Federal Reserve Chairman. Okay, probably one of the most important people in the world in terms of his control and ability to make decisions that affect the biggest economy in the world, is giving this press conference, and he is going to say some things about what the Federal Reserve had done. This was about a week and a half ago. So what I wanted to do is just kind of let you hear what he says, and we're going to come back to you and make sure that you have an understanding of what's going on there.
We've lowered interest rates to near zero in order to bring down borrowing costs. And we've also committed to keeping rates at this low level until we are confident that the economy has weathered the storm and is on track to achieve our maximum employment and price stability goals.
Right, so he's talked about that they have lowered interest rates. That's what we're talking about when we talk about the discount rate. Okay, if you remember, you go to the slide, they are lowering these discount rates as a way of increasing the supply of money. You see, when we talk about discount rates, interest rates, all this kind of stuff, what we're talking about is the cost of money, right? When you borrow money to buy a car, when you borrow money to buy a house, or maybe you're going to borrow money to go to college, you're going to do that for a price, and that price is interest rates. Well, if we want people to borrow money, then what we're going to do is we're going to cut those rates. We're going to lower those rates, making it cheaper to borrow money. Now, the idea behind this is, of course, is that, again, remember, our economy is going through the contraction phase. We're slowing down. So the hope here is that by lowering these interest rates, people will be more willing to invest. People will be more willing to borrow money and spend money, trying to kind of get this economy heated back up again, trying to flatten the curve, if you will.
Even more importantly, we have acted to safeguard financial markets in order to provide stability to the financial system and to support the flow of credit in the economy. The critical task of delivering financial support directly to those most affected falls to our elected officials, who use their powers of taxation and spending to make decisions about where we as a society should direct our collective resources.
Did you hear that? You may have kind of zoned out there for a second. Let's go back. I want you to check out this other part. Check this out.
The critical task of delivering financial support directly to those most affected falls to our elected officials, who use their powers of taxation and spending to make decisions about where we as a society should direct our collective resources.
Damn, that Jerry guy, man, not only is he trying to help explain what y'all have already talked about or supposed to have learned about with monetary policy and the Federal Reserve, but he also managed to give you a little preview of where we're going next. That's right, because see, the Federal Reserve does something when our economy is either doing very well or doing very poorly. But guess what? They're not alone. It's also your government. All right, so when we start talking about the government, that's our next step. It's going to be something called fiscal policy. And you should have picked up what he talked about, taxing and spending. So we may, if you're paying any attention, may have picked up and seen there might be some things that are going on with government taxing and spending over the past couple of weeks or so. I don't know, maybe the government might maybe be trying to do something as well with the economy, and that is of course what we call fiscal policy. Be on the lookout, that's coming to you very soon. Jerry, go on.
The Fed can also contribute in important ways by providing a measure of relief and stability during this period of constrained economic activity, and by using our tools to ensure that the eventual recovery is as vigorous as possible. When the spread of the virus is under control, businesses will reopen and people will come back to work. There is every reason to believe that the economic rebound, when it comes, can be robust. We entered this turbulent period on a strong economic footing, and that should help support the recovery.
All right, Jerome Powell, everybody. So again, in summation, he was basically saying that one of the major things that the Federal Reserve done is lowering these interest rates as a way to increase the economy. Of course, he also talked about price stability, which you should realize means we're talking about inflation or massive deflation. And then he also mentioned that, of course, they are just one component. You also have the government and their fiscal policy. Now, the Federal Reserve chairman kind of did what you would assume that he would do. He is somewhat optimistic. He believes that when the economy does begin to tick back up, that we will be at a higher peak than we were. That's kind of a good rah-rah thing. That's kind of what you want out of your Fed chairman. You don't want him saying, man, we are screwed, right? So that's a good thing. But he says the overall health of our economy is really what's going to help our recovery from this massive economic situation. Of course, only time will tell. We'll see. Speaking of we'll see, again, this has been designed to try to help wrap up the Federal Reserve with the monetary policy. Again, now we're tying in fiscal policy. That shouldn't be too much, but we're going to give you that. After that, we're going to get into a little bit of international trade, and then we're going to wrap up a couple things with personal finance. Remember, you got that EverFi stuff, too, that was due a couple of days ago. So if you haven't done it yet, please get on it. Anyways, I hope everybody's taking care of yourselves. If you ever need anything, please reach out to your teachers. Be good. Take care of yourselves, and we'll talk to you soon. Bye.